Onassis Foundation. Dublab.
Welcome to the Quarantine Tapes, a daily podcast from Onassis LA and Dublab. Hosted by Paul Holdengräber, this series chronicles shifting paradigms in the era of social distancing.
Hello, Paul.
Hello, is this Nomi Prins?
Yes, it is. How are you doing?
I am very well and so happy to speak to you. Thank you so much for taking the time to take this call. Nomi, tell me, what have you been up to for the last 6 months? How have you been living this quarantine time?
Well, lots of ways I could answer that question. I've been doing projects and I've been also getting more in touch with people I haven't spoken with in quite some time. In terms of a project, I decided after a couple of decades of having let it lapse to go back in to finish a PhD dissertation in economics. Because although I talk about economics and I've lived economics for some time, I hadn't quite completed it. I did other things in my life instead. So I used this opportunity to write a little dissertation.
What's the dissertation?
A dissertation for an economics PhD. So basically, it's come in at about 250 pages of written work and about, I don't even know how many pages of footnotes and references. So basically digging deep into the academic side of my brain had...
And what is the title for now?
So for now, it's basically 21st century money and power relationships between the U.S., China, and Brazil.
Goodness me! When is the major motion picture coming out?
Right? Seriously.
Yeah.
It's got some good landscaping. I've been, obviously in the United States, but traveled Brazil and China, and it's interesting times right now to be kind of taking a step back as everything's unfolding at the same time. You're in kind of like, two dimensions, or probably a lot more, but you're in multiple dimensions. You're watching, you're living, and then you're trying to put yourself forward in time and life and looking back to see how you would sort of commemorate this time period through, well, in my case, writing and research. So it's you're dividing your time brain space in that way.
Well, congratulations to using this time so fruitfully. I do remember that when I finished my dissertation, before I did, my advisor back then said there are two kinds of dissertations: brilliant dissertations and finished dissertations.
Yeah, I'm going to go with option B.
Yeah. Now,
he was right.
Yeah, he was absolutely right. Well, I don't know. I shouldn't say he was right.
For me, I shouldn't say for you. I'm sure for you it would have been option A and option B.
But it's so interesting, your trajectory, because maybe you can tell our listeners a little bit who you were and what you're doing at the present time. By that I mean the kind of work you did many years ago, and you moved yourself out of that world. Yeah,
well, many years ago, I was a 19-year-old person who got a job on Wall Street at the Chase Manhattan Bank, which is now J.P. Morgan Chase. And I spent about a decade and a half between the sort of major banks on Wall Street as well as in London, being an investment banker throughout a lot of changes in that industry, a lot of travel, a lot of analysis, a lot of working with multinational companies and central banks and all sorts of high financial sort of players. And I left all of that in the wake of 9/11, actually, to become a journalist and a writer and an observer and a storyteller, and to work more in that sort of public sphere. of telling people, from my own experience and obviously my own perspective, how things really work in the financial world, and how that impacts people, countries, the planet, and sort of what I can do to make that as clear to people who don't have the inside years in those industries.
And that is what I really want to talk to you about, how to make things clear. A friend of mine who's an extraordinary historian spoke about the euphoria of ignorance, which is a term I've always loved. He always said that when he started a project, he started with the euphoria of ignorance. And here, reading your work, I must say I know so little. So we hear so much about the Federal Reserve without necessarily at all understanding what it in fact does. So briefly, can you give us some, as it were, historical perspective? When, for instance, was it created, and what was its original purpose? And is it, I really don't know, is it part of Wall Street or part of the government?
Yeah, that's those are excellent questions. And I think for me, just to peg into what you're saying with respect to the history and to take it from the historical to the current usage of the Fed, because I love history. And actually, when I was working in banking, I had less time to kind of delve into history. And it wasn't until after I left that I've been using my experiences working with the Federal Reserve, or at least, watching the Federal Reserve from inside Wall Street, that I actually really understood it, leaving Wall Street and looking back at its history and what made it come to be. And so what it was primarily was that about 113 years ago, in 1907, there was a big panic, a financial panic in New York City. And the major reason for that, long story short, was some people were trying to manipulate the market and some people were trying to manipulate it the other way. But in the aftermath of that, it was people who had their money with certain big banks at the time, and also even smaller banks in New York City who were getting hurt by not being able to get their money out when they needed it. And as a result, at the time, Teddy Roosevelt was the president of the United States. And a man named J.P. Morgan was the basically major banker in the United States and really in the world at the time. He was connected, he was rich, he was powerful, and all of that. And so Teddy Roosevelt actually contacted Morgan and said, we have some problems here. Things are going crazy in the markets. Can you help me? Basically, can you help the presidency? And by the way, we're going to give you $25 million from the Treasury Department to kind of do what you need to do with to sort it out. Now, J.P. Morgan before that had also been contacted by other presidents in a couple of smaller panics. When the Treasury Department of the United States, which basically keeps all of the tax money of the United States and the receipts and is supposed to protect the finances of the United States as a nation, had run out of money before that and had actually come to borrow gold and money from Morgan before that. So this was not an odd occurrence. It was just a bigger occurrence. After which, J.P. Morgan got a little afraid. He did use the $25 million. He did help stabilize the markets. He did give a lot of it to his friends. But he also thought that there should be, as there was in France and in England, a kind of central bank for the bankers of the United States that could be there when they had an emergency. So in this situation, if there had been, in his mind, a sort of outside bank, then that could have given money to him as opposed to the Treasury Department and stabilized his friends' financial institutions and the market and stuff. So he and a number of actually senators, one of whom was a senator from Rhode Island, Senator Nelson Aldrich, and some bankers got together and decided to present to Congress this idea that they would scout around Europe and decide what was happening in England and France and come back and report and start creating this sort of central bank for the United States. The way it was sold to the public didn't happen until Woodrow Wilson was president, and the Federal Reserve Act did not get passed till December 1913, basically before Christmas of 1913, which eventually established this central bank, the Federal Reserve, which was going to be a system of 12 banks, all in one system, that would be in different parts of the country. so St. Louis, so San Francisco, so Atlanta. And the idea being that they could sort of help their local areas, which is how it was sold to Congress, but also help the general area of the United States when there are problems down the road. And so that act was passed. That established the Federal Reserve. The Federal Reserve is not part of the government per se. However, the head of the Federal Reserve gets appointed by the government, selected by the president, and then Congress can either approve or not approve that selection. Congress has never not approved the selection of the president. So there's a pretty good relationship there of what happens and a connection to the government. But it also protects the big banks. So there's a strong connection to Wall Street.
Right.
And the Wall Street banks are members of the Federal Reserve, and they have membership shares, just like people have shares in a company. And they have these shares basically of the Federal Reserve itself. And then so when they need help, the Federal Reserve is there to help them, but that also benefits them because they are members of the Federal Reserve.
Right,
so there's a very tight relationship.
And, I asked you at the very beginning of our call what you had been doing for the past 6 months. Let me change that question slightly and ask you, what has the Fed been doing for the past 6 months? We hear about trillions and trillions of dollars. Where are those trillions of dollars coming from, and where are they going, and what are they being used for?
So they're coming from a couple different places, but for the most part, the Federal Reserve being able to sort of electronically create money that effectively then goes through the largest banks in the country. And the idea of that is to incentivize them to lend it out to the actual people in the country and to therefore help the economy because individuals or small businesses and so forth will be able to get loans from their banks, and the banks get that money in turn from the Federal Reserve. And the idea is that all makes things work well. But in reality, what happened was the trillions of dollars you're mentioning, which is about $7 trillion. So that's a significant.
Yeah, I can't even figure
portion.
out what that looks like.
It's very, very. I'm not going to say this right, but it's like go up to Mars, multiply by a couple times, come back down, and that distance is like by $7 trillion. That's not exactly accurate. Different people have the actual math on that, but it's a lot.
It's a lot. However you calculate it, it's a lot.
Yeah. However you visualize it, however you calculate it, it's a lot, and it's electronically created. It's not like anybody's made this money and the profits or whatever, or they call it a reserve system. So there's the reserve or the insurance that banks would have to put out up to the Fed in order to protect themselves in an emergency situation or a crisis. Actually is produced from anything. It's electronically created. Now, there is a portion that goes to the Treasury Department, which is basically comes from taxpayer money. And what the Treasury Department does to help the Fed electronically create more money is say, all right, well, we're going to give you, and again, big numbers. So we'll just realize that. We're going to give you $10 billion of taxpayer receipts of money that taxpayers have paid into the United States government. You can keep that, and you can use that as collateral or as backing for creating $100 billion. So we will take $10 billion from people, and you can create $100 billion from that. How does that magically happen? Well, the Fed basically electronically creates that money.
Incredible.
But with this idea that somewhere underneath it, there is real money. And in the case of some of the ways in which the Fed has produced some of the money it's created, there is this tie-in to sort of real money along the way. But for the most part, it's really not. It'd be like, if you wanted to buy, a bunch of cars on the street because they're just there, and you only have money for, or a lot or whatever. You only have money for one of them. You basically say, I'm just going to pay you for one of them, but I want 10. And then I'm going to sell those 10, and then I'm going to make money for those 10. But you didn't actually really have money to begin with. It's kind of like that.
Right.
But it sort of increases to trillions and trillions of dollars. And instead of it being cars or old bicycles or whatever, it's bonds, it's debt or loans that have been created by banks against people's properties, against people's businesses, against municipals or cities trying to run themselves during crises or whatever it might be, that the Fed effectively holds in return for some of this money that it just creates.
Nomi, in one of your articles from this year, earlier, I think in April, you wrote in 2009, as the economy was just beginning to show the first signs of emerging from the Great Recession, the average American company owed $2 of debt for every $1 it earned. Fast forward to today, and that ratio is about 3-1. And then this, which is totally mind-boggling, for some company it's as high as 15-1. For the Boeing company, the second largest recipient of federal funding in this country, it is 37-1. Now, I told you about the euphoria of ignorance. Tell me, what exactly does this mean?
So it means that basically, on up from, say, average companies through Boeing, is that they're borrowing way more money than they have or than they can make. And as a result of them borrowing all of that money, not having a plan or a path or the reality of them having it or making it, they sort of have to keep borrowing more in order to pay their borrowing bills. So it's kind of like you open one credit card, you max it out. You open another credit card to pay back the first one, you max that out, and so on and so on and so on. At some point, you're on the hook for all those cards. In the case of Boeing or in some of these companies that are more, have those ratios even a little bit lower, but still high, they want to continue to borrow money in order to pay back what they've already borrowed. So as a result, for example, this year, on average, a lot of the larger companies have borrowed about twice as much just in the first 6 months of this year. That's net of government support. So that's just what they then borrowed from the market, not even from the government. So it's in addition to the government, about twice as much in the first half of this year as they did for the entirety of last year, which was already high in terms of borrowing. So it just means that these companies, even before the pandemic, are living on the edge of that next bill, as a lot of people are, but from the standpoint of how they operate and their responsibility to whether it's their employees or whether it's to their products or whether it's to paying taxes or whatever it might be, that makes them more responsible but less accountable. So in other words, not really responsible at all. They should be, but they aren't. And that's one of the reasons why when the pandemic hit and, we're all sitting at home and people are trying to stay safe and certain businesses are closed, certain are open in just different ways than before and all of that. There's this shortfall in the lack of planning or anticipating or setting money aside for a rainy day to pay their own bills that a lot of companies have faced as well, even before the shutdown, which has just made it worse.
Can you give us, Nomi, a sense of how decisions by the Federal Reserve ripple outward across the globe? How does the Fed interact with other central banks, as it were?
So for the most part, because the Fed is connected to U.S. dollars, because they're the U.S. Fed, and because dollars themselves are used in more international transactions among banks, among trading partners, among countries, among companies than any other currency. It's the world's prevalent currency. What the Fed does means more with respect to what other central banks do than any other central bank. It's kind of like the leader of the file, the leader of banks. So what the Fed did in March, and it was actually kind of doing a little bit of this before the pandemic as well. It was increasing its books. It was basically creating this electronic money more and more and more even before the pandemic relative to last year, because banks were already having some problems with some of their corporate customers paying some of their bills. So already things were a little sketchy before the pandemic. As soon as March happened, the Fed cut interest rates to zero, where they've been a lot of the years since the financial crisis in 2008, but they're creeping a little bit up from that. What that means to real people is that any money they might have saved in a savings account gets no interest at a bank because the rates are so low, which the Fed has set. It also means, going back to the prior conversation, that companies, banks, countries will borrow more and more, will increase their debt more and more because the interest rate the Fed set was so low, and because now other central banks look at the Fed and they copy the Fed for a lot of reasons, but effectively because they can. And that means that a similar thing happens throughout the developed world and also throughout, in this case, recently the emerging market countries. And so it meant that a lot of emerging market central banks, which are smaller and which for the most part handle their own economies way more than they get involved in international economics and trade and money flows. I mean, they are involved, but not at the same extent as the major countries are. And so that means that in their own countries, things can get even more dicey because rates go down, more borrowing goes up there, inflation sets in there, and real people have a harder time paying for things because their prices have gone up because of this entire process. So what the Fed does impacts people, other countries, other central banks, other banks in this way.
From what you can tell us, how much dissent exists within the financial sector itself? In other words, what kind of debates are happening in those halls we know so little about?
Most of the debates that happen within banks are how people get paid at the end of their quarter. I mean, there's not a lot of real sort of philosophical debating with respect to the economies or finance, except as they pertain to the trading positions of the banks themselves, how they make money from their customers, or how they make money from the companies that borrow from them and how they get repaid and that sort of thing. So it's less kind of debate and more just what if analysis. If this happens, then we do this. If this happens, then we do this. If the Fed doesn't reduce rates, then our customers can't potentially repay their loans to us, or they won't borrow more, so we won't make as much.
But I'm wondering if there is dissent, in the sense that now we're reading more and more that some of the mega companies, we could think about Amazon being one of them. There seems to be, our moment now is perhaps rife with possibilities for dissent, and I'm wondering if any of that affects the world you know so well.
Well, and there's certainly different companies that look at their business models differently. For example, an Amazon structure where Amazon has so much cash, or Apple has so much cash, and what they do therefore differs to what a bank might do, because banks are stuck between companies borrowing or lending or creating new shares and then making money off of that, or engineering sorts of new finances that they can make money out of, as opposed to just sheer products or moving sheer products. Right. Amazon moves products, Apple creates products. I mean, I'm oversimplifying.
No, but we understand.
So in that respect, so in that respect, there's different attributes that different companies have relative to money and products and just the flow of money than the banking system itself. From the banking system perspective, it can pretty much figure out how to make money out of any scenario, not least because it has this backer. I mean, it does ultimately have the Federal Reserve, and ultimately in Congress and Treasury Department, whether it's run by Democrats or Republicans, doesn't much matter. They're going to be supported. The financial system ultimately gets support. The bigger companies may also ultimately get support as well, like a Boeing, even if they have tremendous debt problems and they haven't managed their finances well because of a lot of historic relationships, as well as this availability for money creation should they need it, or for appropriation should they need it, relative to like real people who don't have that same line of defense or line to money that these companies or banks might have. But in terms of dissent, it's not really so much dissent as just how they can utilize the situation to their advantage,
right?
As opposed to agreeing or disagreeing with it.
Nearly in closing, sadly, to what, this is an incredible moment we're living through on so many levels, of course, and it might be a moment where certain opportunities could exist. And to what extent do you think this moment, which has highlighted to the extreme, perhaps, the wealth disparities in such a stark way, what might this moment afford? Is it an opportunity perhaps to do things differently? And what would that mean, to do things differently, when we go back to what passes for normal?
Well, there's one thing I did actually on my on this COVID period that connects to what you're asking for me, which is I visited the Hoover Dam, which was closed, but I went to where the Hoover Dam was, and so, as we all do as writers or researchers or reporters, when we're in a moment, when we're in a place, when we're talking to a person, we're our minds sort of go into all of the different tangents relative to that. And so I'm looking at the Hoover Dams, which the point where it is, where it fills up the basin of water, and thinking that the Hoover Dam started in 1930. It was at the height that it was built between 1930 and 1935 of a Great Depression. It was a partnership in terms of financing it, of public money, government money, as well as private company money, as well as people that were hired by the government, as well as people that were hired by private companies. And the water that it was able to capture and still able to capture really created growth throughout much of the West Coast. and so, here you have a situation where there's a vision of continuing a major project, because at the other side of that project, there's economic benefit to a lot of people. Yes, to companies. Yes, to anyone who's investing, but also to real people. And so, looking at now, and for example, the debates that are happening between those who don't believe in climate change and those who notice it, as well as people who look at sort of the Green New Deal concept as positive or negative. The reality is we are at an opportunity where we can choose to finance building or infrastructure building that relates to energy. That's whether it's for water, for solar, for wind, that's sustainable and also cheaper
right.
to produce and use, and better for the planet. That has a lot of different benefits from a public perspective, from a private company involved perspective, from a people perspective, from a planet perspective, and just from a pushing the envelope perspective. We've seen during this pandemic how much better and cleaner the air can be, for example, when there's less congestion in it, right?
Yes, that would be the slight silver lining of this moment.
If we could do that, we also push forward what I think is ultimately inevitable, but unfortunately taking way too long for people to see that. I'm sure there were fights about whether the Hoover Dam should go ahead back at the height of the Depression, but it was pushed ahead. It was started under a Republican administration. It was pushed ahead under FDR during a Democratic administration. It was a joint effort from so many perspectives, and I think those are the sorts of projects that we should be focused on from across political perspectives, from across individual ideas, from across working together. To truly take the next step in terms of all of our energy needs. So I do think, for example, this is a moment where we could be doing that. We certainly have seen that money can be created from nowhere to sustain companies and to sustain Wall Street and so forth. We've seen it multiple times, but certainly now. So it can be both created and used to fund other types of projects that can actually bring us along as sort of humanity, as well as the planet, as well as economically.
Nomi, it's been such a pleasure speaking with you. It feels to me that we should bring some of the people who could make informed decisions to the Hoover Dam and perhaps inspire them in situ of what one can do when the world seems to be really on fire. But I'm so delighted to speak to you and thank you so much. And I hope soon I'll be able to call you Dr. Nomi Prins.
Thank you so much for that. I will keep you posted.
Please do. All the best to you.
You too, sir.
Bye-bye.
Take care, Paul. Bye-bye.
To support this show and Dublab's progressive programming, go to dublab.com/support.